Welcome back to the Business Buzz, everyone. Episode 12. Can you believe it?
Time flies when you're analyzing financial strategies,
It
right?
really does. And today we've got a really fascinating one. It all starts with Legal & General, L&G for those
Yeah.
in the know, a big UK insurance company doing some pretty major reshuffling. They're selling off a big chunk of themselves.
Their U.S. insurance arm, to be precise, and the buyer is Meiji Yasuda, a Japanese insurer. But the real headline here is the price tag, $2.3 billion.
Wow, that's got to be some kind of record for them, right?
It is L&G's largest transaction ever. And this sale, it's not just a one-off thing. I think it reflects a much bigger trend we're seeing across industries. Companies are slimming down, getting rid of anything that isn't a core part of their business.
Like a strategic spring cleaning for their portfolio.
Exactly. But the question is, why now? Why are so many companies deciding to streamline and focus?
Yeah, I mean, it seems counterintuitive. Wouldn't a bigger, more diversified company be stronger?
Well, not necessarily. The business world is changing faster than ever these days. Technology, consumer behavior, global competition, it's all in constant flux. And for companies to keep up, they need to be nimble. They need to be able to react quickly to new opportunities and challenges.
So by shedding those non-core assets, they're basically freeing themselves up to be more agile.
Exactly. And that agility lets them pour resources into the areas where they have a real competitive edge. It's all about maximizing efficiency, making the most of their strengths.
So L&G, they sell off this huge part of their business, pocket a cool $2.3 billion.
Yeah.
What do they do with all that cash?
Well, a big chunk of it is going right back to the shareholders. We're talking 40% of their market capitalization over the next 3 years.
Wow, that's a pretty hefty return for investors.
Yeah.
But it also raises some questions, doesn't it? Like, is this intense focus on shareholder value always the best strategy?
Now you're hitting on one of the big debates in the business world today, because some people argue that prioritizing shareholder returns above all else can actually backfire in the long run.
How so?
Think about it. If a company is obsessed with boosting its stock price in the short term, it might make decisions that are harmful in the long run. Cutting back on research and development, skimping on employee training, even passing up opportunities to expand into new markets.
So they might be making investors happy in the short term, but they could be weakening the company's future.
It's a real risk. It's like giving someone a sugar rush. It feels good at first, but there's a crash coming later. Companies need to find a balance between rewarding shareholders and making smart long-term investments.
So how does this all play out in practice? L&G announced a £1 billion share buyback program. What exactly does that mean?
A share buyback is basically a company using its own cash to buy back shares of its own stock from the open market.
So they're essentially taking shares off the table.
Exactly. And when there are fewer shares available, the value of each remaining share tends to go up.
So it's a way to reward current shareholders by making their shares more valuable.
You got it. But of course, share buybacks have their critics.
What do they say?
They argue that the money spent on buybacks could be better used elsewhere, like investing in new technologies, upgrading infrastructure, expanding into new markets, even improving employee compensation and benefits.
Yeah, it's like, do you give everyone a slightly bigger piece of a small pie, or do you invest in making the whole pie bigger later on? Tough choices.
That's the heart of the debate. Short-term gains versus long-term sustainability. And it's a debate that's only going to get more intense as the business world continues to evolve.
Okay, so we've got this huge sale, a focus on shareholder returns, a massive share buyback program. It sounds like L&G is going through some pretty major changes.
And the person driving those changes is their CDO, Antonio Simões. He's made it clear that he wants to streamline the company, really focus on specific areas where he sees the most potential for growth.
And what are those areas?
Pension risk transfer and asset management, especially in the U.S. market.
So it's not just about selling off assets. It's about actively reshaping the company's future, basing bets on where they think the market is headed.
Exactly. And it'll be fascinating to see how those bets play out in the years to come.
And speaking of playing out, how's the market reacting to all of this? I mean, it's got to be a big shakeup for investors.
Yeah, definitely a lot of eyes on L&G right now. But overall, the reaction seems to be pretty positive. I mean, right after the news broke, their share price jumped by 8%.
Wow, 8%. That's a pretty clear sign that investors are liking what they're seeing.
It definitely suggests they're on board with this new direction. I mean, the sale itself, that alone is a big win. Suddenly, L&G has a lot of cash on hand.
And cash is king, as they say.
Especially for investors, because it means more dividends, bigger buybacks, potentially all things that make shareholders happy.
So investors are essentially getting a direct payout from this deal.
You could say that, but I think there's more to it than just the short-term gains. Investors are also looking at LNG's long-term prospects, and they seem to like what they see.
Yeah, I mean, this strategic shift toward pension risk transfer and asset management, those are pretty hot sectors right now.
Exactly. Those are areas that are expected to grow significantly in the coming years. So investors are betting that LNG is going to be a major player in those markets.
It's like they're positioning themselves to ride the next big wave.
Right. And they're signaling to investors that they're not just sitting back and collecting dividends. They're actively looking for ways to grow and adapt in a changing market.
Makes sense. Now, there's another piece of this whole story that I'm curious about. The partnership with Meiji Yasuda. I mean, they're not just buying LNG's U.S. business, they're also taking a stake in the company itself, right?
Yeah, it's a really interesting aspect of this deal. It goes beyond a simple acquisition. It suggests that Meiji Yasuda is really interested in a long-term strategic partnership with LNG.
So it's not just about buying and selling assets, it's about forming alliances, working together to achieve common goals.
Exactly. It's a reflection of a broader trend we're seeing in the business world. Companies are realizing that they can achieve more by collaborating than by going it alone.
So it's not just about competition anymore, it's about cooperation.
Right. And I think this partnership, it really benefits both parties. Meiji Yasuda, they get a foothold in the U.S. insurance market. And LNG, well, they get an infusion of cash and a strategic partner with a lot of experience in a key market.
Sounds like a classic win-win.
It really is. And the fact that Meiji Yasuda is taking a 20% stake in LNG's U.S. pension risk transfer business and a 5% stake in LNG itself, that speaks volumes.
Yeah, it shows they're not just dipping their toes in the water, they're diving right in.
Exactly. They're making a long-term commitment. And for LNG, it's an opportunity to tap into Meiji Yasuda's extensive network and resources in the Japanese market.
So it's a two-way street. Both companies bringing something valuable to the table.
Right. They can share knowledge, share resources, and potentially open up new opportunities for growth in each other's markets. And beyond those tangible benefits, there's also the intangible value of building a strong relationship with a trusted partner.
Right, it's about trust, it's about shared vision. It's almost like they're becoming part of the same team.
Yeah, and that kind of collaboration, that can be a real game changer in today's complex business world. It allows companies to navigate challenges, seize opportunities, really achieve their goals in a way that wouldn't be possible if they were working in isolation.
It's fascinating how all these pieces fit together. I mean, we started with LNG selling off its U.S. business, and now we're talking about strategic partnerships and the future of global business. It's like a single news story has opened up this whole window into the bigger trends that are shaping the world economy.
That's what we try to do here on the Business Buzz, right? We don't just report the news, we try to connect the dots to analyze the deeper meaning behind these events and give our listeners a better understanding of how the business world really works.
And speaking of deeper meaning, there's one more thread I want to pull on before we wrap things up. It's something we talked about earlier, this whole debate around shareholder value.
Oh yeah, that's a big one. I mean, it's a concept that's often presented as this fundamental principle of good corporate governance. But the question is it always the best approach? Are there potential downsides to this laser focus on maximizing shareholder returns?
I mean, it seems like there could be. Like if a company is so fixated on short-term profits, they might neglect other things that are crucial for long-term success.
Right, like investing in research and development, or taking care of their employees, or even being a responsible corporate citizen.
So in a way, by focusing too narrowly on one stakeholder group, the shareholders, they could end up harming the company as a whole.
Potentially, yeah. It's like they're squeezing the lemon to get every last drop of juice, but in the process, they might damage the tree itself.
And then no more lemons.
Exactly. So that's where this idea of stakeholder capitalism comes in. It's this broader view of corporate responsibility where a company takes into account the interests of all its stakeholders, not just the shareholders.
So that includes employees, customers, suppliers, the community, even the environment.
Right. It's about recognizing that a company's success is intertwined with the well-being of all these different groups.
And it's not just about altruism, right? I mean, there's a growing body of evidence that suggests that companies that embrace this stakeholder approach actually perform better in the long run.
Oh, absolutely. They tend to have more engaged employees, more loyal customers, a stronger brand reputation, all things that ultimately contribute to sustainable growth and profitability.
So it's not just about doing good, it's about doing well by doing good. It's a win-win.
Exactly. And it's a concept that's gaining a lot of traction these days. More and more business leaders are realizing that the old model of shareholder primacy, it's just not sustainable in the long run.
It's great to hear that there's a shift happening,
Hmm.
but it also sounds like there's still a long way to go.
Oh, for sure. It's a journey, not a destination. But it's a journey worth taking, both for businesses and for society as a whole.
It's amazing how much we've unpacked just from this one story about LNG. We've gone from a company selling off part of itself to, like, the future of capitalism.
Yeah, it's been a real deep dive, but I think that's what makes these conversations so interesting, right? You start with one specific event, and suddenly you're grappling with these huge, complex issues.
Totally. But for our listeners who might be feeling a little lost in the weeds, maybe we could do a quick recap. Like, what are the big takeaways from this whole LNG saga?
Okay, so first and foremost, I think this whole thing is a wake-up call for any company that thinks they can just coast along doing things the way they've always done them. The business world is changing, and it's changing fast.
Yeah, like adapt or die, right?
Pretty much. And that adaptation, it might involve some tough choices. Selling off parts of the business, investing in new areas, even completely reinventing yourself. But the companies that are willing to make those tough choices, those are the ones that are going to survive and thrive.
And it's not just about reacting to change, it's about anticipating it.
Exactly. You got to be looking ahead, figuring out where the market is going, and positioning yourself to be there when it arrives. And that takes a lot of strategic thinking.
And part of that strategic thinking involves figuring out how to balance the needs of all the different stakeholders.
Right, because it's not just about the shareholders anymore. Employees, customers, suppliers, the community, the environment, they all have a stake in the success of a company.
It's about recognizing that a company is part of a larger ecosystem.
And that taking care of that ecosystem is not just the right thing to do, it's also good business.
Because when everyone benefits, the company benefits.
Exactly. It's a win-win. And I think we're starting to see a real shift in that direction. More and more companies are embracing this stakeholder-centric approach.
It's like they're realizing that long-term success is about more than just the bottom line.
And that's a really exciting development because it means that businesses have the potential to be a real force for good in the world.
Totally. And I think the LNG story is a perfect example of that. They're making bold moves, they're prioritizing the needs of all their stakeholders, and they're betting on a more sustainable future.
It's a story that shows what's possible when companies think big, act boldly, and embrace a more holistic view of success.
Well said. And on that inspiring note, I think it's time to wrap up this deep dive. Thanks so much for joining us today, and be sure to tune in next time for another episode of The Business Buzz.